Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the gold market. As usual, we have prepared the gold report this weekend, and actually we see interesting things. So right now is going on the gold market. I hope it will be interesting to read. So, and things that we see suggest that maybe indeed the change in the minds of the investors that we have discussed in half a year ago, and we said that at some point it should happen. And I think that the recent Fed statement might become the kind of the catalyst of this changings in the minds of the investors is starting to happen. So investors start to worry about their capital, and seems that they're really start watching on the side of the gold market, because currently central banks have increased the purchasing of the gold significantly, despite the ETFs, gold ETFs, losing clients, and investors are taking money out of the market. Some other investors buying gold. It's just because it is impossible to see that actually ETFs holdings have dropped drastically for 40% approximately, but gold price as it stands around 16 even there, it keeps standing there. It means that somebody else is buying it. And now we come to conclusion that this is the central banks who significantly increased the purchasing of the gold. This is first moment. Second moment, investors, we suggest that start to returning to the gold market, and well, more and more publications, news appearing about gold. And maybe this performance, at first glance, is common to performance of the stock markets and others, but this performance might be the first sign of the turning point. It's rather strong, especially on some things that Jerome Powell has said recently. We have talked about this now in the Forex report. It's also important to read, because to better understand what's going on actually and why investors are scared a bit by the things that Jerome Powell has said. Actually, he acknowledged that Fed actually almost has lost control over the situation, has missed all expectations, and actually Fed doesn't know what to do with the current situation. We continue to rate hiking cycle, but we do not know what will happen. Actually, this is some common conclusion on the Fed statement, and that's of course not very comfortable for investors to hear. So Fed right now is vital to return confidence from the markets and what they actually intend to do. But whether this will be successful or not, we will see. But there's all turmoil and this kind of the background, especially the eve of the elections in the United States. It's understandable that investors are turning on the gold. So currently we have the bullish context. Those of you who have had taken the position on the breakout of the intraday 618 level that we discussed on Friday's EA team, so they're doing great. But if you have not taken the position on the breakout on this rally, currently I would say that's not bad level to do this, for taking the new long positions. It would be better to wait, because despite that we have just outstanding performance, we have the bullish context on the weekly chart, on the daily. Market is coming to the overbought. This is potentially might be the bearish stretch pattern by the Jordan Apple, because you can see this is combination of the 618 resistance. This probably also would be the confluence, because from these any reaction points we could probably get the 30% level as well. And market is coming to the overbought. This combination creates the Jordan Apple bearish stretch pattern. This is not some pattern that could change the tendency, but it could pause it for some time, triggering some pullback and technical retracement. And from that standpoint, this combination is not perfect, not good for considering taking the new long position. It would be better to wait for a pullback. although overall performance stands great. Of course, currently we can't speak about the butterfly by far. It's just because, well, this loss below that one, and here probably we do not need this shape anymore. We could erase it. So that's what about the daily. On lower time frame, despite that we see here is great tendency, take a look what we have from the 4 time frame chart. The triangle pattern that was forming here has been broken, but at the same time, guys, take a look. The major tendency is not broken yet. We still have the lower lows, lower highs, but market is coming to the trend line resistance, and this trend line perfectly coincides with the resistance on the daily chart. So that will be and might be a very important point. At the first touch, probably we should get the bounce, but most interesting what will happen next, because here, as you can see, compounding divergence is rising right around the lows, and well, hopefully that will be some upside breakout here. We will see. Meantime, on the hourly chart, this most recent performance reminds and creates the shape of some kind of the double bottom with a it looks really great by the even technical view. So let's take a look. Here's minor wash and rinse to the previous bottom. That should be a fast acceleration on the second bottom. That is very good for the market mechanics of the pattern. So here we have the great thrust up. Market has broken already for the neckline. But is it coming to the 1685 resistance, 1686? Probably market should climb slightly higher, but then we could get the pullback perfectly if it will be retracement just to the neckline, retesting of the neckline, and maybe to the nearest fib level. That probably also will drift slightly higher. So that's the perfect bullish scenario that we will keep an eye on. Additionally, as you can see here, we have great thrusting action, which is also might be the background for Jordan Napoli patterns, whether it would be double repo, Brent butter, or something of that sort. So we could consider it as well. So at current moment, if you have taken position on a breakout of the 618 level, probably you could try to hold it at least until market hits the resistance on the daily. So it's more $5-6 to the upside. If you do not have the long positions, currently it's not best opportunity for taking position. It will be better to wait for some pullback. Volatility probably will be high as we're coming to elections. So, and probably we could get good chances for taking the position. Because from the technical point of view, this is, as I already explained, we are standing near resistance, and this is obviously not the best choice for a position taken. For the bears currently, guys, it's nothing to do. Maybe if you would like to ride on the stretch pattern, although it will be not very, well, safe journey, but getting here some patterns, for instance, maybe, I don't know, maybe it will be double repo sell, and combination of the resistance and overbought on the daily will give you a chance for tactical pullback. So here you could take this short trade if it will be a really good background. But mostly market stands positive, markets shows acceleration, great momentum, and bulls currently definitely have an advantage, and we intend to use this momentum, trying to ride on it after the market will show some pullback here. That will be well, providing better price for considering taking the long position.